Welcome back to Hot Investor Trends. This episode focuses on risk management, how smart investors protect before they grow and position for long-term resilience.
I'm a co-founder and partner at Beverly Hills Private Wealth. We are a boutique wealth management firm specializing in high net worth, ultra high net worth clients and looking to provide really a highly specialized and institutional level experience through in-house portfolio management and sophisticated financial planning. What we typically invest in, we've really looked at it as let's build a platform for our clients, our investors. And we've done this in 3 different ways. We have a chief investment officer who was the best investment that I think we've ever made. And he manages an equity model that's made up of 70 approximately different stocks, globally diversified across all caps, all sectors, which we think is really important at a time when top 10 stocks in the S&P are almost 40%, 45% of the S&P is TMT. So that's very important to us, along with the mandate that no individual stock at the time of purchase can be more than 3% of the equity portion to avoid overconcentration. On the fixed income side, pretty similar. We are looking for investment grade bonds and fixed income. More than 70% of the fixed income products in our portfolio are A- or above. And then also looking for overlooked special situations where we can, still get in at a place where we can find yields at 6 to 9%. And then most exciting for us right now is in January, we launched our very own private fund, primarily for our clients. So that's made up of private equity, private credit, secondaries. We're about to add some distressed real estate, I believe. So that's sort of the platform that we look at. So I'm not sure that we're necessarily investing in a trend. I think we're more investing in a big picture, and trends will sort of move in and out of that naturally. But for us, the big picture is what's important. Let me see. The next question was preferred investment structures. So we try to differentiate ourselves from other wealth managers by investing directly in order to keep fees lower. That's one of the big draws of our private fund for our clients especially. And then we customize at the account level as well. So if you come in and you've got a huge holding of Microsoft, well, that's also in our portfolio. Maybe we're going to reduce tech in a different way to account for that. To be tax sensitive, we do aggressive tax loss harvesting as well, and we're able to do all of this in-house. And then let's see what else. We have the private fund, like I said. Great thing about the private fund as well is we have it administrator who wraps everything in one K1 for us. So we're not getting, multiple K1s, which is really lovely at tax time. And then we've also started doing sub-advisory. So our chief investment officer has relationship with other advisors on different platforms, not on our custodian, and he can use, they can use his various models. Number 1 types of investments we're looking for right now, this came from him, so I guess listen up. Quality small cap or international equities. Things that are overlooked in today's market, but still have a run ahead of them. And we're also rounding out the investments in our select opportunities fund, looking specifically at distressed real estate. And with 1 minute and 3 seconds left, most valuable 1 million plus insight. Prepare for the drawdown before the drawdown happens. Going into this year, knowing what we had coming in politically, the talk of the tariffs, Nick reduced Canada exposure in our portfolio. He, tweaked our portfolios to make it what he believes is about 60% tariff resilient. And it really worked in our favor. When the market was at its trough in April, we only captured 42% of the downside. Clients couldn't believe. They would call us saying, I was holding my breath looking at my portfolio this morning, but you're telling me I'm still up 1%, I'm still up 2%, or I'm only down 4%. And it avoided us having to have a lot of difficult conversations. And I think also just reinforces the fact that ultimately we are really looking to protect and grow our clients' wealth. We're not looking to do anything crazy. Sometimes trends can feel that way. Sometimes they end up, being the home run. I'd rather have a little bit of that. Thank you so much to the Academy. Thank you.
Nicely done. A little round of applause for Lisa.
Appreciate you listening. Coming up next, we explore the mindset difference between building wealth and preserving it across generations.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.